Tesla stock today massively outperformed the markets, moving higher about 2.38%. Here in after hours, you're down about a third of 1%. I think there's a lot of good news in what happened today. There was like 4 or 5 different things that were really big and really important. FSD, it looks like, is heading into China. Ford is canceling plans to make a $3.5 billion battery factory in Michigan. Tesla raised prices for the Model Y long range in China overnight. It looks like India and Tesla's expansion plans into India, are happening quicker than a lot of people expected, and we could actually get an announcement on that in January. Lots of big news. We had vehicle registration numbers as well. Those killed it, much better than anyone really was thinking they were going to be. Now, we just had Nvidia earnings. That's important. We're going to go over what Nvidia just reported. Is this going to affect the broader markets, as well as the FOMC minutes that came out at 2 p.m. today? What is the minutes? For some of you guys that don't know that, it's basically a transcript of the last Fed meeting. It was a little bit of a non-event, but we'll still cover it here in this video. But most importantly, there is going to be a big catalyst coming tomorrow morning, and that is durable goods orders. This could reshape how our markets trade over the next coming weeks, and I think that is very important. Do I think Tesla stock is going higher? Do I think it's a good time to buy Tesla? Do you think it's a good time to wait on the sidelines or potentially even sell Tesla? We'll go over that here in this video, as well as look at the option activity today. Not nearly as crazy as it was yesterday, but nonetheless still pretty high overall. We have a lot of work to get into. The work is cut out for us here in this one. Hit that like button and subscribe to the channel if you guys want to push this out to as many friends and fellow Tesla stock investors as possible. I know you guys want to help them make money as well, so thank you guys for those of you that did that, and let's go ahead and get started. So these 5 catalysts that I just ran through that happened today for Tesla really caught a lot of people off guard. And the NASDAQ was down over half of 1%. You're down another almost quarter of 1% in after hours. Tesla stock massively outperformed. It did like, 4 times better than the triple Qs. That's a big deal. Tesla stock probably would have been up 5, 6, 7% or more if the markets were just flat or higher today, but they were not. So I think this news, especially that Indian news and FSD heading into China, those things can have a lasting impact on Tesla stock. And I think Tesla just got a lot more incrementally bullish after this news today. So if you thought I was bullish before, well, now I'm even more bullish. Now, before we get into the other things that we're going to talk about here in this video, including the data coming out tomorrow, the FOMC minutes and Nvidia earnings, I think I should just talk to you guys for a second. Guys, none of this news that we got today was new information. We know Tesla's going into India. We know FSD is heading into China. I reported on that over a week ago. Analysts and big money are dead wrong on Tesla. As we get deeper into 2024, that's going to become apparent. I strongly believe Tesla stock is moving to all-time highs. The things that we know about don't even get priced into Tesla stock until they happen. And for whatever reason that is, I don't know. But that's to your benefit. No matter what happens, no matter if Tesla goes down, it goes up, it trades sideways. Jeffries comes out with an outright lie on Tesla or a false report. They don't know what they're talking about. If you really want to stay ahead of Wall Street, unfortunately, you have to watch videos like this one that not only give you the information, but provide you perspective. Because all of this information today was known. Like literally all of it, besides the vehicle registration numbers. But we were expecting they were going to be good anyway, so that was somewhat expected. But Wall Street looks at it like brand new information. I'll be the first to tell you, Wall Street isn't even thinking about broad price increases across the Tesla lineup. That's what's coming in 2024. You know about it potentially months before it happens. It's not a question if it's going to happen. I could also make the argument that that Elon was being very dramatic on the Cybertruck launch. and the slow ramp and the drag on margins for the next 12 to 18 months or 15 to 18 months, whatever he said, I believe it was 12 to 18 months, it's probably not going to be that bad. And Wall Street is expecting it's going to take years for Tesla to ramp the Cybertruck, and it's not going to cause any kind of halo effect. It will. And most importantly, that halo effect is going to create a lot of demand for Tesla, and that will allow Tesla to raise prices. Now, what I'm going to say next is a little bit more unknown because we just don't know. But a licensing deal for FSD is 100% not even a thought with most bulls for Tesla stock and all the bears for Tesla stock in 2024. If that happens, Tesla stock easily hits new all-time highs in my personal opinion. Depending on the degree of the price increases on the Model 3 and the Model Y specifically, that could push Tesla to all-time highs. Let's say Tesla raised prices like $7,000-8,000 for the Model 3, and that just started to go net to the bottom line and really boost margins. That's basically what Tesla makes on a Model 3 now, so that would like boost your operating margins like 100% in theory. And the Model Y got like a $10,000 price increase because maybe rates fall a lot lower than what Wall Street is expecting. And Tesla made it very clear in the last earnings call, it's all about the monthly payment. So these things could have real fundamental impacts to Tesla's business and real impacts to helping you make a lot of money in Tesla stock. I'm certain these things are going to happen. Besides the licensing deal of FSD, I'm hopeful that's going to happen. But the other things I just mentioned are going to happen. That's just my personal opinion. I'm not a financial advisor. I'm not a financial planner. Obviously, don't invest based on what I say. But it's like Wall Street isn't even thinking of any of these things. So when it happens, don't be surprised if Tesla hits new all-time highs. And maybe I'm just rambling because it's very frustrating in a way that you won't get any good information on Tesla unless you watch a video like this one or, select other people in this community. And that's unfortunate because the masses do not watch this channel. The masses do not watch, some other channels out there. And they're really not educated if you listen to analysts. So it's a little bit frustrating. Maybe I just wanted to rant because I'm feeling quite under the weather here today. And these children are just something else. Really a tough day, but it was a good day for Tesla stock. And I think many, many more good days are coming over the next couple of months and the next year or two. Nonetheless, hopefully you feel smarter and more informed. And as time goes on, I think it'll come to be obvious that channels like this one, other, channels, again, like I said, really have a heads up on what's happening next for Tesla. So forget the analyst. It really doesn't matter what they say. Bullish analysts, bearish analysts, they just really don't know much. Obviously, the bulls have a better understanding of Tesla, like an Adam Jonas. I respect what he says quite a bit. But especially your bears, it's very, very frustrating. But at least you have sources like this one. And thank you guys. Really appreciate you guys for being here, sharing this passion with me, at least getting value out of these videos. Let's briefly discuss the Fed minutes. And this article says Fed gave no indication of possible rate cuts at last meeting. The minutes show. It really doesn't matter what the Fed says at this point. They basically reiterate the same things we already know. It says, in discussing the policy outlook, participants continue to judge that it was critical that the stance of monetary policy be kept sufficiently restrictive to return inflation to the committee's 2% objective over time. Along with that, however, the minutes showed that members believe they can proceed carefully and make decisions on the totality of incoming information and its implications for the economic outlook, as well as the balance of risks. Now, I'll tell you right now, none of this mumbo jumbo even matters. The markets did not care at all at this report. It's all about what markets price in for Fed policy over the last 40 years. The Fed has really never deviated from this. By this, I'm referring to the Fed rate monitor tool. And as you can see, for December 13th, there is 0 chance of a rate hike. It's basically a 100% chance of a hold. For January, pretty much 100% chance of a hold as well. There is a 2% chance of a rate hike, but you would have to see some really good economic data and some really bad inflationary data to ultimately get a rate hike again, period. For March, you're pricing in a probability of 29.4% chance of getting your first rate cut. This is where you want to be watching pretty closely. If we start to price in a rate cut in March, then I think stocks can get a lot more bullish from here and a lot more excited. There's a 69.1% chance of the Fed continuing to hold through March and a 1.4% chance of a rate hike. So rate hike really is not priced in at all anywhere anymore. The first actual rate cut is priced in for May 1st. Now, why I say this is the only thing that really matters, this and 10-year treasury yield, and we'll look at what those did here in just a second, is because whatever's priced in over 50%, that's what the Fed has basically always done. Like literally always. Besides select severe events like the Rona, people weren't maybe expecting them to cut to zero right away, and they did. But other than that, that's why the Fed likes to talk so much. That's why you have so many Fed speakers that try to, it's called jawbone market expectations. So whatever's priced in, the Fed is going to do. This moves on Fed speakers jawboning. This moves on economic data, inflationary data, things of that nature. So this is all you need to really be watching at this current moment in time. Now, 10-year treasury yields did just hit a new low that you have not seen since back here in September. That doesn't sound significant, but recently 10-year treasuries were at about 5%. Now they're at 4.39%. So you have dropped a lot as far as your 10-year treasury yields, and this is very bullish for stocks. Even today, following the Fed minutes, you did see 10-year treasury yields falling about 2.5%. So that was overall some pretty good news today. And following the FOMC minutes, the markets, bought treasuries. Now, I'm sure what most of you guys are waiting for is Nvidia. Now, Nvidia's revenue triples as AI chip boom continues, and Nvidia's numbers came in at EPS of $4.02 per share versus $3.37 per share, which was expected. A huge beat. Revenue came in at $18.12 billion versus $16.18 billion. A huge beat there, about $2 billion. Even gaming came in at $2.86 billion, up 81% and higher than $2.68 billion, which was the street consensus. Even gaming killed it. Now, with respect to guidance, Nvidia called for $20 billion in revenue for the fiscal fourth quarter. That implies nearly 231% growth. But Nvidia stock actually ended up falling. Nvidia stock is down about 1.5%. This is what I warned of very clearly and concisely here on this channel. This is causing Tesla stock to fall about 0.5% here right now. And Nvidia was just set up in a way, it was trading at all-time highs. Basically, no matter what Nvidia reported, the stock was probably going to fall. Now, the only thing that was kind of negative, you could even say, is Nvidia did warn that the Chinese business might start to slow down a little bit due to some of these restrictions on chips that China can receive, but it's really not affecting the numbers all too much. Nvidia was set up for a fall. Now, if Nvidia would have had in-line earnings, the stock probably would have fell 10%. Nvidia beat massively across the board again, and Nvidia stock still fell 1.5%. Now, I will say nothing is decided until we actually start trading tomorrow. Last earnings, Nvidia went up about 10% after earnings. And then what happened? The stock sold off the next day, ended up closing positive 0.1% higher. It basically gave all of the gain away. It lost like $30 throughout the following day after earnings, from over 500 down to about 470. So it's undecided. Nvidia could end up falling 10% tomorrow. Nvidia could end up going higher by 10% tomorrow. It's really hard to tell, especially since Nvidia reported earnings around 4:30. So you were a half an hour into after hours. There wasn't a lot of volume today in general on our markets, and especially not in after hours. So we're really going to have to wait and see until tomorrow. But the big catalyst tomorrow that is going to move stocks is actually, in my opinion, durable goods orders. Durable goods orders month month over month come out tomorrow at 8:30 in the morning. Now, you're expecting negative 3.1%. This is pretty rough. Last month, you had a month over month gain of 4.7%. So you're going from a big gain to a big decline. Essentially what is priced in. Now, durable goods orders, excluding transportation month over month, came in at 0.1%. Now, I personally think durable goods orders are probably going to come in around negative 2.5%. That's your best case scenario, and I would expect stocks to rally on that. Why? Well, it's simple. A lot of Wall Street isn't going to tell you this, but right now, it's clear. The markets want to see weakening data. They want to see slightly bad data, but not full-blown recession. If the data starts to show a full-blown recession is coming, stocks are not going to react well to that. Sure, the markets are going to start to price in a rate cut probably as soon as December or January. Let's say durable goods orders drop like 10%. You come in at negative 10% or negative 8 or negative 9%. Yeah, we're going to start to price in rate cuts sooner, but that doesn't matter. A recession will ultimately win out over lower rates. That's just a simple fact of the matter. So if this data is too negative, it will be bad news for stocks. If it's negative and not that bad, not too negative, stocks will move higher off of this. 2.5% negative, I think that's good news. 2% negative, I think that's good news. Anything 4% negative or worse is probably going to be bad news. And this could be like really bad news because it will feed into expectations for Q4 GDP. It's durable goods orders, right? Durable goods orders. The GDP report is about 70% comprised of personal spending and things like durable goods orders. So right now, the expectation is a little bit less than 1% for Q4 GDP from the top 10 and top 10 highest estimates for GDP, top 10 lowest estimates for GDP. The mid estimate is, less than 1% GDP for Q4. But if you start to get some bad economic data, this is going to very quickly start to look like we're heading into a recession. And that will not be good for stocks like a Tesla. That will not be good for the markets as a whole. Tesla's option activity today, well, it was $3.12 billion with a positive order value of 40%, 1,048 orders in total. That was from the hedge fund and institutional side. $3 billion is a really good day for option activity. That's a lot of dollars heading into Tesla options. What you seen yesterday of $301.5 billion of option activity was very, very abnormal, and I'm still trying to figure out exactly why. As I said in the last video, I think there was something happening. We were about to get some news or something along those lines, and that did indeed end up happening today. You got like 5 pieces of huge news, so maybe that explains it. But I think with that kind of positioning, we're probably in for some more bullish days to come. Now, if you take a look at retail and include retail in this, the volume on the call side was 60% calls and 40% puts, actually 39.87% puts. So the bulls definitely won out today over the bears. That's for sure. Some good news as well today. If you're taking a look at Tesla stock, including here in after hours, Tesla's currently at $240.10 per share. $240 per share is a big level. I wanted to see Tesla stock close above. Tesla closed at $241.20 per share. Again, you're down about 0.5% here in after hours, but you're still above $240 per share. So that is great news. Now, your 50-day moving average is at $238.76 per share. So as long as you stay above the 50-day moving average, that is pretty dang bullish. The fact you closed above 240 is really bullish. And I think it's only a matter of time before we make our way into the 250s. I predicted, whatever wordage you want to use, Tesla stock would likely break above 250 or at least get to 250 this week. So we're a little bit off of that right now. I know at one point today, Tesla stock was around $244 per share. So I do think more of a rally is to come. I think the data supports that. I think the news really supports that with Tesla. And I think, hedge funds and institutions, they're going to come to the reality that if you want to invest in a quality stock, a very high quality stock that will benefit arguably the most from rates going lower, it's Tesla. right? That is going to have a margin improvement story, a new product in 2024. The clear answer is Tesla. Sure, small and mid-cap stocks, they benefit a lot of the time indirectly from rates going lower via financing becomes cheaper, growth becomes more attractive for hedge funds and institutions. But Tesla has all of that, right? It's going to be easier to raise capital for Tesla, go to the bond market. But Tesla consumers, right? Me and you are actually going to benefit from rates going lower, and more people are going to be able to buy a Tesla. Now, the Cybertruck coming out, that's going to cause that halo effect and probably get a lot more people buying Teslas. Obviously, the more rates go down, the better, the environment is going to be for Tesla. But I think Tesla is so far misunderstood right now. It's honestly ridiculous. And shout out to you guys that are watching this video, because you already know what's coming next for Tesla, and that is likely a substantial move higher from here. Does it have to happen this week? No. Is it going to happen over the next couple of weeks? Probably. Is it going to happen over the next couple of months? Probably. The biggest thing that worries me right now with any kind of bullish rally, and I wouldn't say worries me because I expect Tesla stock will go lower at some point in 2024, it is the recession fears. When it looks like we're heading into a recession, that's when stocks will price in a recession. That's where the bears will take short-term control of Tesla stock and your interest rate sensitive companies. And that's when Tesla could ultimately fall, maybe back into the 190s, maybe even lower than that. It's really hard to tell. But if we skirt by without a recession, well, I mean, in the short term, it could get very, very exciting for Tesla. That's why durable goods orders will be so important coming out tomorrow. Now, if you look at RSI, that is at 58.07. So getting up there, you're above 50. Obviously, 50 is the neutral level, but you're not overbought by any stretch of the imagination right now. And your MACD line just went into positive territory, and your signal line, your blue line right here, is trying to go into positive territory. This gap, this spread right here, is a bullish spread, and it's looking good as of right now for a continued move higher, or at the very least just a sideways consolidation. The rest of this week is going to be a weird one. Tomorrow is the last regular trading day we have. Thursday, markets are closed, and then on Friday, stocks are open, but bonds are closed. And our markets have been moving so much based on the bond market. That's really making Friday a wild card. Historically speaking, Black Friday tends to be a very good day for stocks if it falls on a day when the markets are indeed open. So let me know what you guys think about this information down below in the comment section. Hit the like button as well as subscribe to the channel on your way out of this video. If you guys would like to come trade with us live in real time, link down below in the description of this video as well. Thank you for watching. My name is Michael Tyler. Most importantly, enjoy the rest of your day and night, and I will see you in the next one.